So August turned out to be one of those months where the overall market fell, many portfolios and accounts fell in value, a lot of investors panicked, as they always do, and my personal portfolio fell by about 8% in the month of August. In fact, it was really only the final 2 weeks of the month of August where we really saw a drop in price, and it was around all of the media and press coverage of the recession being pretty much confirmed, and just doom and gloom in the media, which, I mean, come on, we've been used to this now since September 2020, probably since, well, you could really call it from October 2019 when the pandemic hit. But yeah, I mean, we're getting pretty used to this whole doom and gloom scenario now. It would be nice to get some positive news coming out into the press at some point, but it's not to be right now. Look, the portfolio value fell 8%. I'm not concerned in any slight way. I had no intention of selling right now anyway. I'm looking at the next 20 years, holding on to my assets, growing those assets, adding more to that portfolio over that period of time. I've got no intention of selling anything right now. So the value of it right now is completely unimportant to me, really. But I want to document the journey. I want to document this process. That's what this vlog is all about, is documenting my journey from 4K to £1,024,867. And so it's important to obviously track that as you go. So yeah, we lost about £2,000, just shy of £2,000 in August, which we haven't technically lost, obviously, because we're not selling anything, and that value will recover over time anyway. But and really, the way I tend to look at things from a mindset point of view is that we now have some more opportunities. Every week, I will sit down and I will take a look at the stocks that I have identified as stocks that I would like to own. And I will do what we call pricing analysis. So I will look at all of those 54 companies, soon to be 53 because we're getting rid of one. But we're looking at those 53 companies and we are analysing the price that we have, that we can buy them at, and whether or not that price makes sense. Is the stock a bargain right now? Or based on a number of different factors, is that stock overvalued? And the vast majority of stocks are still overvalued despite the drop that we've seen in the market. I would say probably, I think we're probably looking now at 2/5 of that list, maybe 20 stocks, are currently priced at a price that's attractive, that kind of makes sense, that we should be getting in at. And so there is an abundance of choice. And when the markets drop like they have in August, we see more opportunities come up. We see more of those stocks that are right on the cusp of being overvalued suddenly starting to fall into, okay, we would buy at this price. And so it opens up a few more doors. We have a few more opportunities. Stocks that were previously sitting at bargain level are now even better bargains, and so we are really in a position where we are sport for choice in terms of the great stocks that are out there that I am interested in. We do have an abundance of opportunities right now. Rewind back to 2019 before all of this stuff started to kick off, and the opportunities were far less. We had far fewer stocks sitting there at wonderful prices that made sense. The vast majority of our list of stocks were overpriced. So we are currently in this position where, yes, portfolio values are falling, and they have been falling for quite some time. And, investors are out there getting dejected. They're getting demoralized, and they absolutely shouldn't be. They've got the wrong mindset. They're looking at this from a scarcity point of view rather than an abundance point of view. And with an abundance point of view, you would be looking at this and thinking, this is great. We've now got this. I'm spoilt for choice. I have too many options. What do I invest my capital in this month? And for me, it's a great situation. I enjoy it. I am only looking to probably sell in the next 20 years' time. So I've got no intention of selling right now. All I'm doing is acquiring assets and building a portfolio. What that portfolio is worth today or tomorrow in a week's time is irrelevant. I'm not going to sell it then. So what it's worth then is not important. It's like, imagine you have a house. You don't need to get it valued every day. You've got no intention of selling it tomorrow. So why get it valued? It adds no value to you or anybody. And it's the same with stocks. If I had fine art, if I had collectible, rare collectibles, if I had fine jewelry, I wouldn't be getting this stuff appraised every single day. Just because you can get a price on your stocks doesn't really mean you should, right? And the only reason I ever really want to look at my price, the prices of the stocks, are one, to just track how things are going, and I tend to do that monthly. So every month I'll take a look at my portfolio and see how we are doing. I'll write a report for my clients, for my membership, and they get to see all the stocks that I own, how many stocks I own of those different companies, and how those stocks have performed since I bought them. And I do that every month. I also update price analysis every week, and so obviously we're then aware of what that price is because we're looking at it. But we're not looking at the price to determine the performance of what we're doing. It's not a measurable against what we're doing. We are looking at price as a buying opportunity. Which stocks are priced right now that would make me want to buy them? And we've already done our analysis, so we know exactly the price bracket that we're looking for. So we know that X stock, if that falls below £7 a share, we're in. We want to buy some. But above £7 a share, we're going to wait, and we may never own that stock. There are stocks in that list that I don't own, and I may never own them because the share price may never fall enough for it to make sense. Does that make sense? I hope it does. So yeah, I don't look at price to determine performance. My performance and how I measure my performance is in buying the right companies at the right price. That's it. And over time, the profits will take care of themselves. If you do the little things right, the profits will take care of themselves. But I'm not looking at price as a performance indicator of how well I'm doing as an investor. Long term, I am doing that. But in the short term, over the weeks, over the months, that's not a really, it's not a good measure of performance because I'm not planning to sell. I hope that makes sense. It's hard to get across, but it's a mindset thing, and it's what makes the difference between people who are successful investors and who fail as investors, because many people get so dejected and so upset by today's prices that they sell prematurely, and they sell at 30, 40, 50% discounts. Well, you are never going to make money as an investor in anything if you're selling your assets that you've accumulated for 50% less than what you paid for them, right? And they're doing that from the fear that things might get worse. Well, things might get worse, but things will get better eventually. It's this doom and gloom concept that, the stock market will fail and my stocks and the companies I own will become worthless. Well, then you clearly haven't done your analysis, because the companies that I'm investing in are making record profits right now and their share prices are falling. It makes no sense, but it's because of the macro environment that we're in. It's because of the commentary around the economy. It's around Brexit. It's the Ukraine invasion, the Russian invasion of Ukraine. It's the inflation rates. It's all of these different things thrown together. The global food crisis, all of this doom and gloom is pushing markets down. But the companies underneath are doing great. They're making loads of money. And the companies that I'm investing in, I'm doing my analysis. I read every single annual report that comes out on these companies. They're doing great. They're companies making record profits. And yet share prices are down 50%, in some cases. So, I'm buying as much of those as I can, because when the market recovers, when all the doom and gloom eventually goes away, and who knows how long that's going to be, but when the doom and gloom eventually goes away, because these events are cyclical, they always come along, then it's those companies that have been making all that money and pushing money into their own growth that are going to fly. And I'm doing the work now. I'm sowing the seeds now in the winter so that when the summer comes along, I can reap my harvest. And that's what it's all about, essentially. So yeah, great opportunities out there right now. At the moment, my portfolio only has about £440 worth of cash sitting in it, and so I am waiting till I can pump more capital into that account before I start buying any more. We didn't actually buy any stocks this particular month, but most months were pretty active. Most months I'm adding more stocks to my portfolio. I'm not trying to predict markets. I'm not trying to call the bottom. I see a lot of investors who try and call the bottom of the markets, and they say it's now, we're at the bottom, or are we at the bottom? Who knows? What do you guys think? And I've got no interest in trying to do that, because the vast majority, if not everybody, gets it wrong. It adds no value, and so I'm not bothering with any of that. Trying to time short-term markets and predict bottoms, to me, is just completely pointless, and 100% of people are going to get that wrong, and it adds no value because there's no accuracy in it. It's just guesswork. There's no accuracy in it at all, and so what I do is I tend to take a wider view of the whole thing. Shares are 20, 30, in some cases 50% cheaper than they were a year ago. And for me, therefore, because of that, now is the time to be buying. I'm not trying to call the bottom. I'm just looking at the wider picture of the stocks that I love. Some of them are 50% cheaper than they were a year ago, and these companies are doing great. So that signals to me it's time to start putting my capital to work and keep buying more. And I do this every month. And the way I look at it is, so what if a £5 stock that I buy today then goes on in a couple of months' time to fall to £4.50? So what? It's down from £10. So it's still a great deal. You're still buying a wonderful asset at £5, and I could sit there and I could wait for that £4.50 to come along. But what if it doesn't? What if it goes up to £6 or £7 in the next couple of months? Well, I've missed the boat. So to me, I look at this as, is this a great situation? Is this a good price? Does this price make sense? Every single month I'm looking at my list of stocks and I'm thinking, where do I want to put my capital? What makes sense? What's priced at a wonderful price right now? And I take action. I buy. I'm not going to sit there and wait in the fear that the prices might fall even further. Because if they do, I'm just going to buy more next month anyway. So I'm still going to get in at the lowest price. It's guaranteed because I'm buying regularly and often. So hopefully that makes sense anyway. But yeah, so cash wise, we're sitting about 440. The value of the fund is just shy of about 23 grand right now. So we've gone from 4 to 23 grand in what is essentially a couple of years. We're on target. We're on the right trajectory to reach that £1,024,867 target. Everything's moving in the right direction. We're slightly above the trajectory of where we need to be in terms of right now, where on that pattern would we need to be to reach that target in what is essentially another 20 years now. Overall for 2022, we're down 26%. So I don't know how that fares with your portfolio and how you've been performing. Many of my clients, some of them are slightly worse off than that. Some of them are slightly better off. I seem to find myself sitting in the kind of average of how our entire clientele are doing. But I am personally down with my portfolio down 26% for 2022, which sounds awful, but I've been doing this since 2014, identifying these stocks, and the watch list itself, the list of stocks that we have identified, it's evolved over the years. It didn't start off as 53 stocks. It started off as fewer than that. And it's slowly grown and evolved over the years. But using the stocks that were in the portfolio from the date that they were added, we've been tracking the performance of those stocks, and the whole list since then is up something like 160%, which works out, when you divide that up against the 9 years that we've been picking these companies and identifying these companies, we're looking at about 15% annual average return. So, this is a bad year, but you have them. they come along, and there's nothing you can do about them. You can't really prevent them. You can't control the markets. You just have to be along for the ride. I don't even really focus too much on damage limitation. I'm not really like hedging here and there. I'm not investing into other areas to try and offset the losses in my stocks. I'm just holding great companies and slowly acquiring more and adding to them and growing that portfolio. You know, when the market recovers, the work that I'm doing now at buying more at these depressed prices, that's really what's going to come in and make me very profitable going forward. So, you know, I'm looking forward to obviously the market recovering, but I also don't want it to start recovering too soon, because now is my window to be adding more stocks and increasing the value of my portfolio essentially. And I can only put so much in a month. I only have so much surplus income every month to be able to pump into invest. And so, you know, the longer that this draws out, really the better for me, because it gives me more opportunity to buy more, to add to that portfolio at these depressed prices. So overall this year, because of that 26% drop in value, we've lost about $7,500 in value. Luckily, prior to this last year, prior to 2022 kicking in, we were well ahead. We were doing so well. We were massively up on where we needed to be. You know, the trajectory of the portfolio value was so much more higher than where we actually wanted to be to reach that 1 million. We were looking at, I think we're at one point, we were 3 years ahead of schedule. And then obviously this year has come along with the 26% drop, and it's knocked us down to, we're still above that trajectory of where we need to be, but it's a lot closer now. But we're not under it, and you know, even if we were under it, I still wouldn't be concerned, because I know that when the market kicks back in, we're going to be back up there again. So yeah, we've had £525 worth of dividend income this year. I'm hoping by the end of the year to have achieved about £700. We look at when I pick companies, I'm not picking them based on dividend income. I'm looking at them as as growth stocks. So I'm assuming that the value of that stock, the share price of that stock, will pay out far greater yield than the dividends will. And it's just one strategy of many. There are many different dividend investors out there that are doing very well for themselves, and I'm certainly not slating dividend investing in any way. It's just not for me. I prefer to look for companies whose share price is going to skyrocket 1,000, 1,500% over 10 years, whatever. And you do find those companies from time to time, and I prefer that approach. But we still receive dividends from the companies that we invest in. They're just not generally high dividend payers. And so as an average over the companies that I own off our list, we tend to see anything from 2.5 to 3% dividend yield a year. Because these companies aren't paying big dividends. What they're doing with their profits is, instead of giving those dividends out back to shareholders, they're reinvesting those dividends into their own growth. And I prefer that, because I think that's going to grow a much bigger, more powerful, more expansive company that's going to have a much higher share price in 10 years than if they were to give me those dividends for 10 years. Does that make sense? So I would prefer that approach. I prefer companies to keep that money and reinvest it for their own growth, because I will benefit better than if they were giving it to me in dribs and drabs as dividends. But they still pay dividends, and so we see about 2.5, 3%. And so this year I'm hoping to achieve about £700 in dividend income, and we're at 525 at the end of August. So that's looking on track. That's looking pretty good. When we hit 1 million in 20 odd years time, that dividend income will be worth 25-30 grand. So a year. So that'd be nice. But right now it's not very exciting. But it's 500 to 700 quid a year free income. I mean, it works out about 50, 60 quid a month free income, which is nice. But okay, so that's pretty much how we're doing for up to end of August. One person contacted me this week called Slim. Hi Slim, if you're watching. And he asked me, is now a good time to get into the markets? And it's a really quite potent and important question, really, because I suspect there are many people out there thinking the same thing. I keep an eye on a lot of the stockbrokers and their annual reports, and I read a lot about how things are going through companies like IG, through CMC Markets, Hargreaves Lansdown, Interactive Investors. I keep track of their performance and their client numbers and the number of active accounts that are being opened under administration and all this kind of stuff. How much money are they managing of other people's money? And it's at times like these where they see a drop off because investors are withdrawing their capital because they're trying to keep cash flow, keep cash rich in these times, because they're worried that the cost of living is going to go up and there's going to be problems, and so they stop investing and they even withdraw some of their investment as cash to just sit there in case they need to dip into it, which is something that people feel is the right thing to do. But what you tend to then see is that people then start to flood back. And this is what we saw in 2008, 2009, in the last recession that we had. People started to flood back into investment markets in 2009, beginning of 2010. And the speed at which new accounts were being opened were huge, because people knew that the markets were depressed, were waiting for the sign of the recovery, and then started buying as prices started going back up. I deal with it differently. I just constantly buy when the markets are down, when markets are high. I'm constantly adding more. Is now a good time to buy? Personally, I think if you are looking to get into the markets and you have, let's say, a 1 year view or a 2 year view on the markets, as in you would be looking to invest your capital, but you'd probably be pulling it back out in a year's time or 2 years' time. If that short-term approach is your approach, I would say now is probably not the best time to be getting involved in the markets, because we just don't know what's going to happen in the next 1 or 2 years. We don't know how choppy it's going to be. We don't know when the recovery will come. We don't know if we're in the recovery as of today. We've got no way of knowing. We could be another year away before the recovery really starts to kick in. It could be 2 years. Who knows? Nobody knows. And anybody tells you they do know is talking out their butthole. It's just one of those situations where you can't control it. It's like the waves of the ocean. You've got no control over it. You're along for the ride, essentially. If, however, you, like me, have a long-term view of where you're going with this, if you are looking to invest in companies and you're going to hold those companies for 10, 15, even 20 years, I think now is probably the best opportunity you have to get into the markets and to get the best possible prices. Yes, the markets could continue to fall a bit further over the next year. They could. We know we're down 26% by the lowest point. In 6 months' time, we could be down 36%. That is more than possible. But over the long term, do we expect markets to still be... it would be a record. It's never been seen before that the stock market stays depressed for longer than a couple of years. The recoveries have always come. And when the recoveries come, they come in and they perform better than ever before. The markets go higher and higher, then they come down. They don't go down as low as they did before last time, and then they recover and they go higher than they ever have before. It's like the teeth of a saw almost, kind of a staircase almost, where the prices go up and they reach new highs, then they go down, but they don't go down as low as they did last time. Then they go high, but they go higher than last time. So it's a combination of higher highs and higher lows, and they constantly go up. And that's what we tend to see, and it's not quite as uniform as that, but that's generally what we've seen throughout history. And when these markets depress right now, what I'm telling my clients and what I'm telling anybody who asks me this question, is now a good time to get in, I would quite happily put my money in the ring, or whatever, my hat in the ring, what is the phrase, I'm not sure, and say that it's probably unlikely that we will see prices this low again for a long, long time. Because when the market recovery comes in, the prices are going to go higher than they've ever gone before eventually. I don't know how long it's going to take 5 years, 10 years, 15 years before that point is reached, but it will. And then there'll be another crash. Then there'll be another event that causes the prices to come down. But chances are they won't come down as low as they did this time. They'll still go down, and they'll go down 20, 30%, and everyone will be panicking and throwing their hands in the air and saying, oh, this time it's different. But the prices won't go as low as they did last time, chances are. And so really what you're saying there is, what I'm saying is that the prices today, at these low prices, we may never see them again. And so for that reason, I think now is a wonderful time to start building a portfolio. And you've got to go in with the mindset, the awareness that we could still go lower yet. If you jump into the market and in 3 months' time prices are lower, don't start panicking and complaining that, hang on, I'm losing money. No, you've got to be prepared for that. Almost expect it, and be cool with it. That's really important. You've got to be cool with the fact that the price of your investments, the value of your investments, will probably fall over the next few months. But they're not guaranteed to. We might be on the verge of the recovery now. Who knows? New prime ministers come in, maybe things will change. I honestly don't know. And it's impossible to predict. And everyone will have their own opinions on this matter. You watching this will probably have your own opinion, but your opinion really, without wanting to sound awful, doesn't matter. It doesn't count. It's just a theory. It's just a prediction. And as I have learned over the last 10 years of investing in the stock market, predictions are worthless. Most people, if not everybody, gets them wrong, and they add no value. You can't trust them. So what value do they add if you can't even trust them? So yeah, I would say now is a good time to get involved in the markets, but you'd have to be prepared to cope with the next year or two where things may be volatile, the prices may go down further, they may stay where they are, it might be a choppy sea for a while. We might be in the recovery right now, but all that points to is, now's a good window to get involved in the markets, to start building a portfolio, because in 10 years' time, I suspect prices are going to be far higher than they are today. And that's all you're looking for. You're looking for prices to go up. The trick here, and the caveat, I suppose, is that you've got to invest in the right companies. You can't just invest in any old company, I mean, look at anybody who invested in Tesco in 1999, 2000 and paid £2.50 a share. They are miserable gits right now because the price is £2.50 a share and we're in 2022. They've waited 23 years and got nothing out of their shares in Tesco, and there are stocks out there that aren't growth stocks. They can't grow. They've reached the pinnacle. They've reached they can't get any bigger now. There's nowhere for them to go. They're making less than 1% profit margin a year, which means they've got nothing to reinvest into that business to be able to expand, even if they could. And so they're not going to grow in share price ever. And so those are the sort of companies you don't want to be investing in. You want to be making sure you're investing in companies that have growth potential, that have room to grow, that have enough profit margin that they can reinvest into that growth and make that growth happen, that have growth strategies that make sense. There are some certain companies out there that their growth strategy, you read it and you think, really, that's how you plan to grow? That doesn't not cool, not a good idea as far as I'm concerned. But companies out there that are like expanding into France and Germany, and they run pilot schemes, and these pilot schemes have worked so well, and so they've created a French name for their business, but it's the same business, and they're going to play out the same model that they've used in the UK, but slightly tweaking the system a little bit to suit the French people. And the pilot scheme that they've done has worked really, really well, and every store that they open makes them 2.5 million after 3 years, and they plan to open 250 stores across France alone, but they're looking at Italy, Germany, Hungary, Israel, and you think, wow, this is a company that have got a wonderful future, wonderful growth prospects, and they're making 30% profit a year, and they're reinvesting all that profit. They're not paying out huge dividends, they're reinvesting in that growth. Their share price is gonna be huge in the future, and it's companies like that I'm interested in. So now is a wonderful time to get involved in the markets. But I'm going to wrap it up there. That's how we're doing. It's been a difficult month, I suppose, if you're looking at it from a performance point of view. But for me, wonderful opportunities right now. One, to be getting involved from scratch. If you're not already invested in UK stocks, now is a great time to get in. But even if you have built up a portfolio, now I think is the time to start adding more to that portfolio if you're not doing so already. And doing so on a monthly basis is a really good idea. So yeah, thank you very much for watching. I hope it's been insightful. I hope it's been useful. I'm really enjoying bringing people along for the journey, because what you're doing is you're seeing the ups and downs of this entire process, right? You're seeing months where we lose years where we lose $7,500, or months where we lose nearly £2,000, in value. And you're seeing that happen. You're seeing how I'm dealing with it. And so that in 5-10 years, I'm going to be pointing back to these videos and saying, look, this is how we dealt with it. And these are the rewards that we're now seeing because of that. And I think that process, whilst that's going to take 5 years to come to fruition, I think these videos are going to be really, really important from an educational point of view for investors that are 5 years down the road behind me. That when the next crash comes, reminding people, well, look, this is what happened in 08, 09. And the markets recovered by 2010. This is what happened in 2020 with the pandemic, and the markets recovered by whenever. These are going to be really important videos, and they're really important vlog series. So thank you for joining me for it, and I hope you continue to follow my work, because I think this is an exciting journey to be part of. And if you want to say hi, please leave a comment underneath the video. Say hi, I always reply. Please like the video. Please subscribe to the channel if you haven't done so already, to be aware of following videos that we do on this journey. And thank you very much for your support. Cheers, guys.